Here we go. Hi,
Dale?
AJ.
Hey.
Hey, thanks so much for your patience. It's a new thing that we're doing here using Hangout as well. I told the community a little bit about you. Not everyone is written up in Wikipedia, so I'm going to ask you for an 8 by 10 glossy and an autograph.
Okay, I think we can manage that, Dale.
Thank you, buddy. So I like to start at the beginning because we all have a journey from point A to point B. What
Right.
was it like for you, AJ? How did you get involved in the industry, the trading industry, and gravitated towards the options market? Did you have mentors? Were you self-taught? Tell us about the most treacherous time for all traders, which is early on.
Well, that's quite a handful of topics there. But let me just tell you this: even when I was a young boy, I was always driven by the numbers. I'm a numbers guy.
Okay.
I excelled in any math class that I took when I was in school, and my second passion was to fly airplanes. So my degree is not in anything financially related. It's in aerospace, aerospace engineering to be exact.
Wow.
So my goal was to fly airplanes, and I went into the military to do that for the Navy. And when I got out, my original goal was to set up a helicopter shuttle service from Connecticut to Manhattan. Biggest challenge there, you don't have money when you get out of the military. So I had to find a way to make money quickly and then apply that to my business plan. Well,
Now, your dream. You needed an angel or to find your own way to fund it.
exactly,
Yeah.
exactly. So what I did, I had an uncle who traded coffee, sugar, and cocoa on the exchange there in New York, but I didn't want his help in getting a job. I wanted to do it on my own. So what I would do every Friday, I would take the train into Manhattan and I would hang out at the Market Bar and get to know the traders there. I would drink club soda with lime and I would just hang out at the bar and I get to know people. And I did this for a series of weeks until I ran into a gentleman by the name of Don Sylvie, who just happened to be hiring for his company at that particular time. And the big question to me was whether or not I had any experience. And, in all honesty, I told him, no, I don't. He said, well, I'm sorry. We're looking for experience. And I cut him a deal just like any option trader would do. I said, Don, I'll remove the risk from you by working for you for 2 weeks free. And if you don't like how I accelerate during that time, I walk. There's no risk to you. And he hired me right on the spot. So that was my first in to Wall Street at the time. And again, that was in the World Trade Center. Yeah.
Yeah, great strategy. For me, I got signed onto the trading floor, and I had the same attitude as you, AJ. I'd go to all
Yeah,
the different desks and say, you know what? I really don't care what you're going to pay me. I want to learn the industry. I want to learn the business.
exactly.
I saw the belly market go fast market, and people being dropped off in limos and Rolls Royces, and I wanted to be part of that.
And
So,
it's exciting. And, it's hard for me to gauge what your audience right here is looking for, but I'll tell you, I think there's one thing we all have in common, and that's to make money in the markets.
that's the
And
common denominator. You're right.
yeah, and it's not, this is not rocket science. It's actually very easy to make money in the market when you're moving with the market and not trying to go against the market. That's the biggest deal right there. And I would also say it's also the biggest mistake that people make is they try to fight the price action.
Okay, can I push back on that a little bit? I noticed that you had a nice trading call at the lows in Nugget because I
Yeah,
watched the gold. I've always been interested in gold, and we do a lot more than FX here. We cover all asset classes, and
all
to
right.
me, and to me, that wasn't going with the trend. That was really something counter trend, almost a bottom pick. So there are certain situations where you are interested in catching turns, or do you always wait for a trend to be established? Because that would not seem to be an example of an established trend.
Right, and there's always certain exceptions to some of the rules that are out there. That one particular was a very unique trade because rarely do I ever trade stocks that are about to go through a split, or even in this case with Nugget, a reverse 10-for-1 split. But what I felt is that
Why is that? Why is that? You know, people have experienced being in issues that end up being diluted, and I know that sometimes there are reverse splits because institutions cannot participate if a share price is under, I think, $5 or so. Why are reverse splits viewed as negative?
Well, in most cases, it's like the kiss of death. It's a company trying to salvage the price in order to increase the margin requirement. Like you mentioned, a lot of brokers will require a bigger cash up front margin deposit for stocks under $5. And on a technical level, when you see stocks rally over $5, they tend to keep on rallying because the margin requirement changes. In other words, the trader now has more buying power, if you will, to get into that position, and it tends to move the prices higher. But the big difference in what we were doing here with Nugget, which is really the gold miners, it's a leverage 3-for-1. I heard your song earlier about less leverage. This is a fairly highly leveraged instrument, and you have to be careful with those because they're usually just short-term tools that you would use to make money. But
well, compared to what we do here with 10-to-1 leverage on everything we do, it's tame. So ETFs, you know, 3 times leverage. So I understand for an average investor, you know, trading stocks, it increases the volatility.
Exactly, and you know, and if it was anything other than the gold market, I probably would have walked away from it. We had a 40%, just a little over 40% return in 6 days, which is pretty good. I basically I send trade alerts out to those who subscribe to my service, and I have this year with regard to the market, and I hope this is being recorded because I love recording history. I have 100% accuracy in my forecasting for 2015, 100%. And so that means every single report that I put out on the market has made money.
Can you tighten it up a little bit to maybe 110%?
Well, you can't beat that.
I don't think, you know, I don't. Let me ask you this. That's an unbelievable hit rate. What is it normally for you?
It's usually around 77 to 82.
Still excellent.
Yeah,
so you're in the zone right now, buddy.
Well, yeah. If you're talking baseball, you know the Cubs are in that zone too. But
yeah, they are.
You know, you have to be careful because that's a double-edged sword. You know, everyone, if they're in the markets long enough, will have a winning streak, and the challenge with that is that you start to feel invincible.
Right, hubris sets in.
And then
people say, well, you know what? It's the house money. It's your money now, right? It's not the house's money.
Your profits, and you wind up giving your profits back to the market. But going back to NUGT, that's what happens is when a stock goes through a reverse split like that, and the share price increases, it literally attracts the institutional money because now they can move more money instead of buying a $2.30 stock, and $1 million is going to cause it to rally 10%. So it gives the institutions a little bit more liquidity when the price is higher, and that's why you see so much institutional participation in Apple and a lot of the other stocks, like Tesla, Motors, and other companies that have the higher share prices.
Okay, so you're an options guy.
I love options.
Vis-a-vis at the options oracle. So as a jaded person early in my life, I said this: options are like relationships. 90% of them expire worthless. Are you an options writer?
I do a lot of spread trading, so it's all statistics, probability, and outcome. I look for the high probability trades. I shoot for at least 5% in any 4-week period with regard to time decay, and I just keep hitting singles on them. Again, using the baseball analogy, but I like to do the high probability trades, not get greedy, and just keep chipping away with the market on a regular basis. And in the end, we do extremely well.
Okay, so on the decay part, you using verticals, bull bear spreads, risk reversal type positions where, you know, like in Nugget, you could have sold puts and bought calls and made money on the decay plus the appreciation. That's probably your highest risk option trade, isn't it?
Yeah, well, I do calendar spreads, particularly diagonal calendar spreads, vertical spreads, and I'll leg into condors, and in some cases I'll leg into some butterflies. And again, for your audience that might sound like a foreign language, these are just conservative spreads that limit your risk to a certain number. And again, I don't do anything in the options markets unless I'm looking at a chart first.
Okay, you know, you read my mind. That was my next question. So your biases for trades are technically driven by what you're seeing on the charts.
Exactly. Like the chart you're showing right now, it's hard for me to see what that is.
You know, perhaps you could share your screen. There is a way to share screens here.
Let me
It's up, it's up on the upper left-hand corner. It's a green box with an arrow. And upper left-hand corner, if you...
Okay, here we go. All right. Now
then your desktop will come up, and then you could choose what you want to show.
Okay, I'm just going to share my whole desktop here and pull up.
Okay.
You tell me when you could see it. You see my screen?
Got it.
Okay. Now this is basically the PowerShares U.S. dollar index, and again, I'm assuming a lot of your followers are currency traders.
Yes.
This is an easy way for the general public to trade the dollar without feeling, oh, I got to go open up an FX account and read all the books. This trades like a stock.
Right.
And
this is UUP. UUP.
Yeah, this is UUP.
So that's a long dollar, right?
Yeah, basically this is an index that more or less represents a basket of other global currencies, and they match that against the dollar. So
the chart looks identical to the Dixie.
Yeah, and again, it's a simple way, and I love to promote this because it helps all the currency traders out as well. If I'm the educator to the general public that's not exposed to currencies, this gets their toe in the pool, so to speak, because it trades just like a stock. And see, like right now,
I'm seeing a descending triangle, which gives me a bearish bias. What are you seeing?
On the long term, you might say, yeah, that's a descending triangle because I could connect these tops here and go into that price pattern. But on the short term, if you look more closely, this gap down with the doji down here, so this is a short-term bearish move.
Okay, so I think you're also a candlestick guy.
Yeah, I love candlesticks.
AJ be nimble, AJ be quick, AJ uses candlesticks.
And yeah, and you know, another thing about charts is that you have to really do your best to keep your opinion out of the picture, because I could change this chart up any way I want to make it look as bearish or as bullish as my opinion says it is.
Okay.
Yeah. This could also be looked at as a pennant and a breakout bullish long term. You know, so you got to be really careful.
Right.
I pick my time frame, which is usually short term.
What is that? 1 hour time frame? 4 hour time frame?
No, I'm more of a swing trader. Again, again, thank you. Yeah, the currency traders are like in and out, but
all right. So a daily is your shortest time frame.
Yeah, daily. But I could hold a position with the options spreads for 3 weeks, 4 weeks, and cash out and roll into the next month.
Okay.
See, this Friday, this week is very, very interesting because here we are talking on Wednesday, and 2 more days is options expiration Friday. for the October chain. And what you may not know, well, you're a pit trader, so you might know this. The week.
Oh, yeah, they're going to try and settle it at a strike price, so both the put buyers and call buyers lose their money.
Exactly. That's called getting pinned. And
Okay.
I actually wrote a white paper for the chartered market technicians through the MTA that talks about the pin factor and how stocks are generally drawn to prices that have the highest buildup of open interest on both sides. And then what happens, it's kind of like you're letting out the pressure relief valve. The following week, which is next week in this case, we generally get higher volatility in the week after expiration, and you can track this through historic charts and such. The week after options expiration is usually the most volatile, so that's great for the traders who are looking to get a slightly higher percentage of return on a shorter trade.
Okay, so that's also very useful information to look for an expiration and the next time period after it to look for initiating positions. So
right.
Here we are in the middle of this, whatever you want to describe it as. What are you looking forward to doing in the UUP?
Well, I'm going to switch to NUGT and then go back to UUP so you can see what to look for. On this day right here, which was, let me see, I'm looking at this. It was right here.
The day before the NFP.
Yeah, exactly. This was a bullish engulfing pattern.
Right.
And we bought this at $2.86 pre-split, and then it just literally took off. Now, here, this big red candle is a bearish engulfing pattern. And again, for those who are trading currencies, if you could look at these engulfing patterns are some of the most reliable signals you can get on a chart. About 80% of the time they're going to be accurate. Obviously 20% they won't be, so you've got to protect yourself. And I will many times buy and sell on these signals. And it's very, very interesting how that works out. You could see that was just a home run of a trade right there.
Yes, it was. Congratulations.
So going back to UUP, I'll take a look here again on the daily.
Do you think with the bearish engulfing candle, before we leave this nugget, that we should now, at the minimum, enter a corrected stage back to the downside, or could this be the 20% level where that bearish engulfing candle fails?
No, I think this one is going to hold, and here's why. Another thing you have to watch for. You'll notice these are my actual charts. This is exactly what I use to trade. You'll see there's no indicators, oscillators, moving averages, nothing. It's bare candle patterns with volume. And you'll notice that NUGT moved up in a pretty dramatic way, more than 45% angle there. Yeah. But look at the volume here. Can you see this?
Yeah. It's declining on the last few days to the other.
Yes. Now, volume, in my opinion, volume is one of the forgotten leading indicators. It truly is a leading indicator. And when you see prices going up with dropping volume, that tells us that the buyers are losing that momentum. If they were aggressive and still very bullish, volume would be increasing in the direction of the trend, and it's not doing
that. That's a pearl, AJ.
Yeah, it really is. And I could even fan this volume. You'll see over the past 3 days, and although the market still has a lot of time before it closes, I still think the volume on this one will drop by the end of today. And so you have a consistent drop in volume with a stale or stall price action here. Again, 80% chance it's going to drop. So I've completely gotten out of the NUGT, took my 40% profit, looking for the next trade.
Okay, and after a move like that, you're not going to trade the reaction. You're going to wait for the pullback to reinstate.
Exactly.
Right?
Exactly.
Okay.
Now, for someone who maybe is not so convinced it's going to go lower, you know, you mentioned it again in the pre-warm-up here. Just trail your stop. You know, just use these short-term trend lines or legs to gauge where you're going to trail your stop higher, and then lock in a higher profit. If it goes higher, you're in great shape. Let the stock tell you when it's tired. Let the stock tell you when to get out, and that's when you get out and you break. I happen to sell this up here when I saw the big drop in volume on a gap up.
Okay. I have a question from the community. I'm pretty sure I know how you're going to answer it. Do you feel engulfing candles have the same accuracy on all time frames?
Absolutely.
That's what I thought.
Absolutely. And that's whoever asked that question, that's a great question, because you do have day traders here. And look, this is NUGT on a minute by minute, and you can see that there's intraday resistance up here. Okay. Yeah. And if you look, there was a bit, even on a minute by minute, if I zoom in here, I don't know if any of you could see where the bearish engulfing pattern is, but look at this right here. Boom. Look at that right there.
Yeah.
This is minute by minute. And then it comes back down, has another bearish engulfing pattern, went a little bit lower, but then it started to rally. If this was a red candle, this is almost the bullish engulfing pattern here at the bottom. So
yeah, what's that one at the bottom? Is that called like a doji or a
spinning top? It's a spinning top.
Yeah, spinning tops make me dizzy.
Well, spinning tops, dojis, hammer patterns, those are all really, really good signals when you're looking for pivot points. And by the way, Dale, on my Market Guy website, I have a free video library that explains all of these. I came up with what's called market shots, and they're 3-minute videos that explain different signals, so you can play them over and over again. I make that free to the public if you want to just flash that.
Yeah.
Now look, here we have a bullish engulfing pattern right here, right now forming as we speak. This is live.
Right.
Now, if this holds, now I don't know how many people would be trading live at this point, but if this holds, remember this is minute by minute, if the next minute comes by and this stays as a bullish engulfing pattern, then what you do is you would trade that and you would use your role reversal. I know I'm using another term here, but former resistance broken turns to support. Use the role reversal. See, now we have a bullish engulfing pattern, so I think that it's going to go up to test that high. That's my forecast right there.
Okay. All right.
And it'll probably go a little bit higher from here. So if you're trading and you think, okay, there's a bullish engulfing pattern, 80% chance it'll go higher, I put my stop down below that pattern, and I just get out if it closes below that, and then I'm done.
So you use actual physical stops. You don't use mental stops on this.
I use physical stops. Mental stops tend not to fire when you need them to. So
yeah, you know what I say about mental stops? I tried it once, and my first stop was a mental institution.
Man.
All right, so those. So those are some great looks. Anything else you want to share with us?
Well, you know, when you're again looking at the chart, and if you're an option trader, you want to again just have a high probability. You know, everyone seems to be going, at least lately, the people I'm talking to are looking for a long shot home run. And my opinion of the general markets long term is extremely bearish. I mean, I am really bearish about the general markets. I've never before in my 33 years have I seen such a confused Federal Reserve Board. Never. I mean, the signals that they put out are confusing. They're not sure of themselves with interest rates. Currency traders are going to have a field day when interest rates start moving higher, and I believe they will. But you don't want to go for the long shot. Go with.
So you're saying, getting back to the baseball metaphor, you're better off hitting for the average, hitting singles and doubles, and swinging for the fences and blowing up your account.
Yeah, and listen, when I was younger, I made millions of dollars without hardly even knowing anything because I followed the trend. And you mentioned an important word. I did have mentors. And I, as a young trader, would simply just hang out with those who I knew were the most successful on the trading floor.
Okay.
And I basically just copied what they did. And one of the things they did was they kept very tight stops. They would go
Okay.
and take short-term trades, but you're talking half of 1%, you
Right.
know, and they're out. You know, it wasn't like holding on to a loss and hoping that it gets better. It wasn't like that.
Yeah,
Um,
and I have like a million Pinkertisms that hope is
yeah.
oxygen in our life, but carbon monoxide in our trading.
Oh yeah. It's true. Hope is not a strategy. It's an
Yeah.
emotion. And in this world of trading and investing and options and all that, you cannot allow or afford to let your emotions pop in there. You have to be very strategic, stick to the numbers, stick to the signals, and if you don't have the discipline to get out when you should, then try to find someone that can hold you accountable. You know, it might be
Mhm.
a spouse, might be a close friend.
Could be a community like
Yeah,
we have.
absolutely.
Yeah.
What you're doing for your audience right now is you're creating a community that is critical to success if you want to continue to learn. I always like to surround myself with people who know more than I do. I'm not too proud to say I know it all. I don't, and I know I have a lot more to learn. But I also learn from my mistakes over the years and try not to duplicate them.
Yeah. Well, I'll tell you what, AJ, it was a great interview. It was a pleasure talking to you. You want to show your website and how people that are hearing you now that saw you could.
Oh, I
Um,
appreciate that. That's nice. Let me see if I could get that open. Basically, it's the Market Guys, plural, themarketguys.com, and I'll just put that in there right there. And to show everyone where the videos are, it's simple. Just go to the video link right there. Can you see that,
okay.
Dale?
Yeah, got it.
And I have a whole library of things that people can learn using my actual charts. Again, they're very clean. When I was using the 1% rule, I did throw a 50-day moving average up there. But look, gap trading,
Yeah.
the roll reversal, that one thing that I'm showing, that made me $1 million in the gold market, learning how to use the roll reversal, simple horizontal line that you could draw on your chart. And then, of course, other things that would support the signals that you want to pay attention to, and it goes on and on. You just look at those videos over and over again. It's free. I give that as a gift to you and your audience. And
I
hopefully
appreciate that, AJ.
you.
So, trading was a means to an end for your chopper company. Do you still have it, and or was the dream better before it became a reality?
Well, interestingly enough, I made so much more money on the trading floor than I would have flying helicopters and airplanes. So I just do that for fun now. And I have one of my other businesses that I've taken profits and I bought airplanes and I created a flight school. So
Wow.
now I help teach people to fly. I have a team of instructors that do that for me. I don't teach, but I do have the airplanes. And so if any of you want to come over and stop by Orlando for a free ride, we'll take you upside down.
That's where you're trading from now, Orlando?
Yeah, yeah, and I'm soon to be moving out to a place called Cedar Key. It's one of the gems and best kept secrets in Florida.
Mm-hmm.
And I know I will never retire from the markets, but I will be going out there with the horses and pick up a fishing pole every now and then. And still, it's a passion. Trading options is a real passion. I hope everyone can develop that passion so it doesn't become stressful for you, it becomes fun. And when you can learn how to do this for fun, you'll never work a day in your life, I promise you.
Well, you know what, AJ Monte living the dream and a live example that it can happen. And really, it was a pleasure. I'm glad I reached out to you on Twitter, AJ. Thank you for sharing some time because, you know, money comes and goes. Time is gone forever. So thank you for spending some of your most precious currency with us today,
Thank
AJ.
you.
Good
Thank
hunting. Have a
you.
great fall season. let's just wrap it up with your bearish on the stock market. There's two scenarios most people are talking about, that we're in a corrective period right now. We can trade down to 1750, 1760, maybe 1620, and then rally into new highs sometime next year. Or is it your view that the distribution that took place all year is signaling the top and the beginning of a bear market?
Well, I think that we'll still see a little bit lower from here, and then maybe we'll see that year-end Santa Claus rally. But 2016 is going to be extremely treacherous as the Fed starts to tighten, and they don't even use that word anymore. But I do think that inflation eventually is going to rear its ugly head. We're seeing it in the global markets, particularly in food inflation. I don't know how many of you have been comparing.
I don't know what you pay for eggs, but they've tripled here.
Oh, absolutely. And people, you know, I was looking at, what was it? My wife went shopping, and I said, "You want me to come with you?" Which is something I never do. And I noticed all the packages are just getting smaller. Same price.
That's another deceptive
That's inflation. That's inflation. So eventually they'll have to do something. The dollar is, I think, at risk here. The IMF there is a lot of talk and even more rumor that there's a global currency on the horizon looking to replace the dollar. And if that ever happens,
that's been conspiracy talk for a long time, but it's they're definitely making noise. I was surprised they didn't include the yuan in the SDR, and I believe the SDR is going to be the new global currency, isn't it?
It very well could, but whatever happens there, I am a big accumulator right now of silver. I love silver right now, and because I started trading silver, and when you could buy silver at or below what it costs to pull it out of the mines, I'm all over that. And
that's what, $10 break even for silver producers.
Yeah, well, yeah, and you got to look. This is a monthly chart now. Yeah. Very, very close to a bullish engulfing pattern on the monthly chart for silver.
Yeah.
And look at these are 20-year lows down here. These are the 20-year lows. So I'm looking easily at a double in silver over the next 3 years, and I'm being conservative with that. I think
a lot of people talking 70 new highs for the next.
Yeah, and I would love to see that because I'm loaded to the gills with it. But I think easily a double. And if you're taking your profits from whatever you're trading and then tucking some of those profits away into a silver portfolio, I don't think you could go wrong with that.
Well, what about physical? Because if we see $70 silver, you might need it for barter.
Well, you know, again, conspiracy theory perhaps, but hey, listen, why not, for fun, teach your kids how to go out there on one of these websites and buy silver coins or bullion or bars or whatever you want and just tuck it away. I can't tell you, it's such a great feeling to open up your safe and see a wall of silver in there. There's something about that. Maybe it goes back to the days of the pirates, but it's something that really makes me happy. And yeah, it's fun.
they call that the King Midas effect.
Yeah, see, that's why I'm never going to tell you where I live, Dale.
You beat me to it. I was going to ask for your address. So, AJ, it was compelling and fun to hang out with you today, buddy.
Oh, thank you very much. I appreciate it, and it was fun for me too.
All right, AJ Monte at the Market Guys is his website. At the Options Oracle is his Twitter handle, and you could find more out about AJ on Wikipedia. And here's a guy that made it. So you don't have to reinvent the wheel. Just model yourself after someone successful. So I'd like you to mentor me the rest of my life, AJ.
Thank
All right, buddy. Thank you. Good hunting.
All right. You too.